The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at the DAX. We've had another extension up here to this, 12,600 area. You notice we had that 3 drive to a top yesterday. We backed off with a beautiful ABCD pattern. This is an hourly chart, so you can see where we are. All it's doing is every time that it backs off about 30 points in the DAX, it keeps going higher. So the volatility has disappeared in the DAX, but it is still going higher. Now, one of the things that someone's talking about today in the Tiger Den is about Intuitive Surgical. I don't know anything about the stock, but I do know a person that was in it from the very beginning. This was back in 1986 when I moved to Avila Beach, a little beach community south of San Luis Obispo. I was staying with my good friend John Raffoni. We were both going through some problems, and anyway, we were going through a divorce. Anyway, what was happening there is every Sunday we would have some of the doctors from the area would come by and they would go salmon fishing, and one of the doctors was Fred Grant, and he went to school with the guy that started Intuitive Surgical, and he got in it from the very beginning. And Fred is about 91, and he's still in it. Anyway, that's neither here nor there. Okay, let's move on and talk a little bit about the FTSE, because that's a really interesting pattern in the FTSE. If you remember yesterday when we were discussing it, that we had that really long consolidation around the 1730, gosh darn Larry, 7,300 level. Oh, wow, 7,230 level in the DAX that we broke all the way down and made a beautiful ABC this morning on the upside. So this is actually shows you that there's a lot of volatility in the DAX, and we will be looking at that very, very closely. Dudette, I'm going to let you handle the NASDAQ because you have been absolutely spot on. But I do want to bring it up because it was very interesting what happened yesterday. I'm going to let me put this chart. 1 second, please. Okay, 1 second here. There's where we are. You'll notice here that we went right up to the 61% retracement yesterday, and if you really want to see how a pattern can fail, go see what happened at 68.65 in the NASDAQ. Folks, it exploded out of there. I don't know what it was that made it do it, but that's what really did it, and that's what pushed the S&P above the ABCD, which was at 2705. So that's what did it. I don't know why, but that's it. That was one of the things that I wanted to chat about this morning. If I had 2 people ask me about, what do these patterns mean as far as probabilities and stuff. And so let's just take a quick look at one that we have been extremely bearish on for quite some time, and that is the Treasury bond chart. And where do I see it going? It's going to go right to the 78%. I think we're very, very close. I mean, it looks like that's looks where it wants to go. I mean, I don't see anything you're going to stop it, especially with that big move to the upside yesterday. So that's what I see. Anyway, if we take a look at this Treasury bond chart, this is an hourly chart, so you can see that it covers about 3 weeks of information. You'll notice that on the 23rd to the 27th of March, we had that 135 pattern. What's important about this, folks, is if you just drew a line from the 23rd to the 27th, you notice how that line lines up perfectly, and then it goes up and makes a 3 drive to a top pattern on April Fool's Day. And here again, if you drew the line from 1, 2, and 3, you'll see that it lines up. Now, if these markets were really erratic and everything, this wouldn't happen. That's just showing you that you're seeing some type of a symmetry that is in these bonds. Now you're seeing the same thing back on the 6th of April. We came down and made a 78% level. Then we made up another 3-drive pattern in the Treasury bonds at 146.29, and then yesterday we made a perfect 61% retracement. We went one tick above the exact 61% retracement at that 146 level. So, and now we backed off, over $750. So, when these patterns go through those numbers, folks, by just a little bit, I'm talking just a few $100s, it means that there is a very strong probability that there is going to be a pattern failure, and you really want to pay very, very close attention to that. That's my 2 cents worth. I think it's something that is relatively important, but we need to be watching it very, very closely. Now, someone's asked a question about the crude oil. As you remember, in crude oil, we have been looking for a potential in crude oil to get up to the 68.85 level. Let's just take a quick look at it. This is what we were looking at. Here again, you're looking at this 3-drive pattern that we've looked at on the daily chart. That comes just a shade under 69. I don't know if it's going to get there or not, but if you look at it, if you look at the time from the low to the highs on these, the crest should come on the 25th. That's a week from today. So I don't know if it's going to be there a week from today or not, but that's what the chart is telling me. This is nothing about fundamentals. It's all based on what's going to happen technically. Now, it doesn't work all the time. In fact, sometimes it seems like it never works. But if you stick with it over a period of time, you're going to be able to see that you get a pretty good idea of what's going on, in this market. So pay very, very close attention to it. Now, if we go just a little bit shorter term in the crude oil, I just wanted to show you the importance of some of these ratios that we're looking at, because yesterday when crude oil was backing off, and it backed off $2.30 a barrel, look where it stopped. It stopped exactly at the 382 retracement from the low that we made back on April the 5th. And if you look at that April 5th low, and you'll see that the 2 lows that were higher than that, that is a 3-drive pattern. You have A, B, C, D coming in, and that was also a 78% retracement of the low that we made back on the 27th of March. So that's what we try to do, is to fit these patterns into a scenario we know how much we're going to risk, because we don't know which ones are going to work. But we do know that if you stick with it over a long period of time, and I'm talking 100 trades, you're probably going to see that look very, very interesting anyway. We'll see how this works. We're coming into one of the strongest seasonal that they always talk about, and that is sell in May and go away in stocks. We're still a week or so, a couple weeks away to see if that's going to happen. We'll discuss that at a later time for sure. So right now, we're going to pay a few bills for our leader, Tom O'Brien, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to talk a little bit about the gold and silver market because we got above that $17 per barrel level, per ounce level in silver. We'll discuss that in a minute, but the chart that I wanted to talk about today was given to us by our good friend Mr. Z in the Den. It basically shows over the last 25 years what's been happening, with the gold-silver ratio, and that means it's the ratio of 1 ounce of gold to 1 ounce of silver. As you can see, it got to an extreme of 30 many years ago, 2011. And where we are now is back up to this 82 level. This means, if this chart is correct, it means that gold is going to start to lose to silver, if that is in fact the case. We don't know that, but we're going to be watching this because it's like that dollar index chart. If we go below 88 in the dollar index, that's going to tell us a whole lot, because that will mean that inflation is getting ready to really start ramping. You folks can't remember this, but back in the 70s, that was the 1970s, not the 1870s, we had inflation around 8 to 12%. You can imagine, what that is, what that's all about. That's a pretty negative thing. I happened to be finishing up my career at Eli Lilly in the mid-70s, and they had a thing called the COLA, Cost of Living Allowance, and we used to get raises of 6-7% a month sometimes because the cost of living was going so up. But the good part is that once the cost of living started to go down, which was total baloney because all they did was just change the way that they calculate everything, the company just left those allowances in there for most of us. So anyway, we'll watch this really closely. Now, gold and silver, we want to talk about it because I really think that we're getting really close for a really big breakout here in the gold market. We've talked many times about this level that we're looking at up here where the market has backed off $34 each time. This last sell-off that we had from $13.69 to $13.35 was $34. We're now up to the 61% retracement of that smaller range. And gold is a really, as we all know here from watching Mr. Z trade it, we should call him the gold magician because he trades gold and silver as well as anyone I've ever seen. And we'll bring this up here and Let me see. I don't know how it looks. You know, Mike, that's a really good point. How silver looks in relation to the euro, but you know, most people are buying it in terms of U.S. dollars, so I don't really know. But let's take a look here at gold just over the past couple of days here. This is a hourly chart. You'll notice that that low we made down at the bottom there at point A, down $34 from the high that we made, and we rallied up. We made a perfect ABCD. We're right at that 61% retracement, but the perfect ABCD brings it up to around 1360 if that is going to happen. But right now we're right at that 61% retracement of 1356. One of the toughest things in trading is if you go back to the fears that Mark Douglas used to talk about, is fear of missing a move. And it's much better to be out of a market wishing that you were in than in a market wishing you were out. So pay close attention to that. That's a really important trading thing, because not having a position is a position because you're waiting, you're being patient. And when you're being patient, you're waiting for the optimal best time, to be a buyer. Now, I believe once we get above the 1375 level in the gold, it's going to be a very significant breakout. And I believe that we're going to see at least a $150 move to the upside in gold if we get that. And the $64 question is, when will it happen? And that is the answer that I really can't tell you. I'm watching it, but I really don't know. Now today, as you recall from my good friend Norm Winsky, we have a really big Astro Day starting on the 16th through the 18th, and here we are on the 18th. If you remember, we had the new moon on Sunday night, and now we are in the area where we're looking at these two planets that are in retrograde motion now. And as Norm pointed out, these have a strong tendency to be a very, very important cycle point for some of these things, especially in the financial markets. And as we've seen in the bond market, it is already confirmed a bearishness. We haven't seen that yet in the stock indices, but there is that possibility because we do have that ABCD pattern forming, right at that spot. So, watch it very, very closely. Now, we just went above $68 a barrel in the crude oil. Remember, the number that we're watching there is just under $69 a barrel. We're having a very strong move here the last couple of days. Well, actually from yesterday's low, which was a perfect 382 at that 65.50 level. But watch that level up there at that 60. Actually, let's get this up here so we can see it exactly. It comes in right about the, right around $69 a barrel. Another $1 a barrel higher in crude oil is going to be very, very interesting to see what happens at that point. It will be a very, very important spot to look at. As far as the S&P this morning, we went up to 2718.5, and now we're only backed off about 4 points. This should be, if this is really a good market, it's not going to get much lower than the 2707, because if we break below 2707, that is going to reinstate that big ABCD fib number, and that'll be an interesting one to watch. But that's the only thing that I see on the horizon. If we take a quick look at that NASDAQ, because that's been the leader, and then right after the NASDAQ, I want to show you the laggard, which is, I think, very important. Just a second. I'm having a hard time scrolling down here. Let me get this NASDAQ up here. Oh, see, we're really close to this NASDAQ. Well, we hit it. Oh, my gosh. Hold on just a second here. Wow, I think you have to be short the NASDAQ. Wow, it just did it. Hold it just a little while ago. Just a second here, boys and girls. Let's get it up here. We made this. We hit it. By golly, I didn't even see that. It was on the air. Yeah, we got up there, the 68.60 level. That was a perfect 61% retracement from the high that we made back on the 29th of March. It also took out the highs from the 29th of March. And, it hasn't gone anywhere yet, but that is an ABCD pattern completing, and it's at the 61% retracement. So watch it. Now, Yesterday, we had that ABCD pattern in the Dow Jones Industrials in the E-mini, and that completed perfectly, and it only went about $200 higher, and is now started to roll back over. So this is going to be a real interesting pattern completion today, if that is the case, just for the fact that we have these patterns completing, and also that they're completing in an area where we have these astro things coming in from Norm Winsky. And of course, if they don't work, you just call Norm directly. The phone number is 555-556-5655, and he'll be happy to tell you what went wrong. Anyway, we've got a commercial coming up here pretty soon. When we get back, we want to talk a little bit about the wheat market. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to bring up one particular chart that I believe is very, very important, and that is the banking index stock. Let's just bring this up because yesterday we had some really good earnings by Goldman Sachs. They increased the dividend, and the stock hit the 61% retracement at 262. It dropped $10 an ounce like it was on, someone was trying to put it out with gasoline. But this thing is really broken down, and you'll notice that the banking index is right at very good support as of the close. Now, one of the things that we try to look at is when you have bullish news and the market does not react to bullish news, there's a high probability it's going to go to the downside. So keep in mind that this is not acting very, very good at all. This was the leader. This was the one that bottomed first. It topped first. So kind of pay attention to these banking things. There was another interesting thing that came across Bloomberg yesterday, is that one of the employees for Morgan Stanley, who had been there for 15 years, quit yesterday to go out and start his own hedge fund. $1 to anybody that can tell me the name of that man. His name was Morgan Stanley. And of course, Morgan Stanley is a merger of one of the old JP Morgan firms, and I forget what the other part of it is, but it's been around for everybody, for a very, very long time. So keep an eye on that. You're right that 24,700 in the goal in that Dow index is very, very important, Mr. P. We had the completion of the ABCD there at 24,785. We got as high as 24,820, and so that's something that we ought to pay attention to. That was one of the trades that we had for our 24/7 yesterday, as we sold the Dow Jones E-mini at that 24. I believe it was 2465 level with a 100-point stop, and that stop is still working, but we'll see if that is going to be the case. Now, again, the Dow of the four indices, the Dow is the weakest. The strongest, of course, has been the NASDAQ, followed by the Russell, and then the Dow Jones E-mini, and then finally, the ES E-mini, and then finally the Dow Jones E-mini. So we'll watch to see what's happening. This is a big cycle day, so let's pay particular attention to that. Now, I wanted to also bring, because we follow silver and gold so closely, I wanted to bring up to date on the silver, because yesterday we made a perfect retracement in the silver. We were right at a 382 level at that 1660 level, and as you can see, we went up and completed the ABCD pattern. Now, why this is important is because in the Tiger Den yesterday at this 1660 level, we had our friend Mr. Z from Philadelphia talking about the really good possibility of a rally from there, and we've rallied 60 cents, which is $3,000 in silver, which is no small feat. That's like the gold going up $30, and gold hasn't done that yet. So silver is actually kicking in where it had been slowing down. This is not unanticipated, because if you look at this chart from the Friday report, the newsletter that we put out, you'll notice that we were setting on the exact 61% retracement at 1640 when we came in this week, and as you can see from that smaller time frame, that we were making higher bottoms, and that's not bearish, folks. And now we've cleared above $17 an ounce, and who knows where it can go from there, because now we've broken through the 50%, we've broken through the 61% retracement, and all it takes is just a little bit more, and it's off to the races. So watch this gold and silver. I think this is these could be sleepers here. So we'll see if we're going to if that's going to happen. So let's pay attention to that, because it's really very, very interesting. Someone's also asked a question about the renminbi, which is the Chinese yuan. It has started to trade on foreign exchange. It has pretty good volume and everything. I have not done anything with it yet. The range on that yuan over the past year has been around 7 to down to 6.2, where we are right now. When I first started going to China way back in the mid-90s, it was trading at around just under 13. So it's dropped in half, and that means your dollars over there don't buy nearly as much. So pay close attention to that. Now, another question that someone's asked me, and I'm going to try to answer it the best way that I can, and that's about moving averages. I don't particularly use moving averages, because I believe in the ratios and the patterns coming together at a certain time, but moving averages can be very helpful. We have several people here at TFNN that are absolute, what I think, experts. One is Basil Chapman, the other is Steve Rhodes, and they really understand the relationships of these, and they're able to use them to their advantage. So it just just decides which particular, technology approach you want to use. But if you use it, and remember that the only thing that you can control when you're using technical analysis is the amount of money that you risk, then you have an advantage, because that's the only thing that you can control in the risk-reward equation is the amount that you're going to risk. There's just no other way of handling it. There's you just really can't. So that's what we have going on right now. Getting to the euro. The euro is the one that we need to read. That's the key to the whole thing, because that's the big money maker of the whole move here. If you'll notice here, I'll put this up because we had this sell-off on Friday, and we were at such a critical level in the dollar index. And this is what we're seeing now in the euro. You'll notice we're approaching the old highs from the 11th of April. That takes us up to 24.20, 124.20 in the euro, and exceeding 124.20. You better look at that dollar index, because if that dollar index fails at 88, folks, that's going to ring a bell that's going to be heard around the world. I really believe that, because that means the dollar is getting ready to head south, and that is going to be very, very interesting. Now, it doesn't affect us here living in the United States, but if you start traveling abroad with the dollar collapsing like that, get ready to reach into your pockets, because you're going to need more shekels to pay for everything. Because if you get over to Europe, you're going to be paying a lot. When Sarah and I went to Italy for our honeymoon 10 years ago, the euro was at 160. I remember, because I was in Rome and we got in at like 3 o'clock in the morning, and I had to be up because I had a position, so I had to stay up all night. And I ordered a Diet Coke, and the guy brought me a can of Diet Coke with a glass of ice. It was $9.50 US without the tip. I remember that. I stopped drinking Diet Coke for the rest of the trip. Anyway, just remember that when you see these things, it affects us when we travel, not while we're living here. So that's the real key to looking at. Another question that someone asked me that I'm going to not mean anything, that I can just give you my opinion, is what these tariffs mean. I don't think it's going to be a big deal. I really don't, because first of all, in the edible stuff, the people are going to eat it. You stop people from eating, you have a war. So they might stop steel and engines and a few things like that, but overall, I don't think it's going to mean a whole lot. I think this is a big poker game that they've got going on in Washington, and I don't know who's going to win, but if you had to bet on somebody, I'd take the dude from New York that's running the country right now. He's a pretty good negotiator from what I can hear. Anyway, who knows? 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and some of the folks at TFNN are talking about, these possibilities of going to war and stuff like that. If you remember, just a few months ago, we were ready for nuclear war with North Korea, and now there's a possibility that they could do some negotiations. Folks, when you get to be my age, you got to remember some of the things that happened in your past. And I can remember back in the late 1940s and 1950s when I was in school, and we used to have drills where we would go under the desks at the old St. Benedict's Catholic school that my sister and I attended, and we had to cover our heads for the potential nuclear holocaust. Folks, 25, 30 years later, we find out that Russia couldn't even find the state of Montana, let alone hit it with a nuclear bomb. So I I really don't know. You can't live your life in fear, folks. You remember the story? In fact, I love that Mel Gibson movie Braveheart. They talk about this Scandinavian saying, the coward dies 1,000 times, the brave man dies but once. So you can't live under fear. And we've talked about Mark Douglas's 4 fears many, many times here. So keep in mind that just don't live in fear, because most of the fears that we have just never come to pass. That's why some people have such a have such a tough time trading, is because they deal in fear, and they're watching these little fluctuations that go on in the market. And if you made 20 pips and it goes down 15 pips, it's you forget that it's just the normal stuff that goes on to see what's. Thank you, Martha. You're absolutely correct. Anyway, we're making a joke about Tom O'Brien and his boat. I'm not a boat person, as some of you that know me. I just don't like to go out on the water. And flying, I have no problem with, except I don't think I'm going to fly with Southwest for a while. What a horrible experience to have happen on an airplane, folks. I can't imagine. That's like something out of a sci-fi movie, actually. I mean, it's just really sad. And here they landed in Philadelphia, where my grandkids are, and it was really quite exciting. So anyway, let's move on to the next thing that we want to take a quick look at, and that is the wheat market here. Folks, if you want to dip your toe into the futures markets and you've never traded the futures before, I would highly suggest you look at the wheat market for several different reasons. One, wheat is basically flour and bread, so it's used. It's used all over the world. And it is something that has been trading for thousands of years. If you ever read Dr. Andrew Lowe's book, The Evolution of Technical Analysis, he talks about the astrologers as being the first technicians, and he shows tablets, clay tablets, going back to the Sumerians and Babylonians. They go back 5,000 to 7,000 years, and they show the planet Mercury and the moon and the wheat crop or the picture of the wheat shaft on that, showing that there must be some type of a correlation to this. And as you'll notice here, yesterday we hit the exact 61% retracement in the week in the wheat at 517.5 per bushel. We rallied 11 cents right after that. We're now trading at the 523 level. That tells us that some type of a small bottom, if possibly a larger bottom, has happened in the wheat market, because now we have higher bottoms in this, so it's a pretty good chance. So watch it closely, because if you want to trade futures, a good way to trade corn is wheat, and then also corn. I wouldn't recommend soybeans, because they're a whole lot more volatile than some of the others, but that's a good way to start. Another good way to start is to look at the euro and stuff, and you'll be able to see that you're pretty looking at. Danny, you're right on the gold. You don't even have to look at the 240 minute. You could actually look at this smaller time frame that we're looking at here, because we know what that looks like. We'll bring that up again so you can see it, that we're up into pretty strong resistance here at that 1359. Now, if we get above 1375, folks, in gold, that's going to be something huge. That means that gold-silver ratio chart is going to be popping through to the upside, and it's going to be very, very interesting to see how that unfolds here in these. But right now, they're just sort of in trading ranges. There's resistance in the silver at that 1710 level. Once we went above 17, that was saying that it wanted to go higher, and it rallied $600 from that level without even a downtick. So there's some important support here and resistance both in gold and silver. I'm very, very bullish long term, and I would love to see one more correction, but you don't always get that. So the $64 question is, where do you enter the market again? We exited our long gold positions that we bought in this 1327 level. We exited those at 1355. That's where it's trading right now, and that's a big dilemma, because I don't want to lose the position, but I still have a bias, mainly from looking at this euro that has one more chance for a little bit of a down leg. But boys and girls, if that dollar index breaks below 88, that's going to change everything. We should probably have a special webinar here at TFNN with some of our commodity guys like David White and Andy Hecht, and see, what these things look like on a long-term basis, because that means that inflation is getting ready to really raise its head. And look where coffee is, folks. Coffee's as low as it's been in 15 years. And so what did Starbucks do? It raised the price of coffee. Why not? Because they're raising the price of their margins. They're not raising the price of see what's going on. You're right, Tucker. I'm watching that 1285, and that's $70 away from where it is right now. It looks like it would be a miracle for it to get there, but miracles have happened. But we'll see. Remember, all of our our frustrations come from unfulfilled expectations. That's from Tony Robbins. So try not to expect anything, just react to it, and you'll be far, far better off. And don't have any, preconceived notions of what your positions are going to do, because that's when you get frustrated. So just try to look at what's going on, and then you're going, that would be a miracle, Tucker. It would definitely be a miracle. So we'll keep that as we move that. Yes, the Dow Jones transportations are moving up. They had a sell-off, and then they came back really strong from it. And you'll notice that I noticed, I'll bring this up here, because we had a very weak rally into Friday, and that's what I said in the newsletter, that if we're really strong here on Monday or Tuesday, and boy, we were certainly, I said, this is going to turn all of these charts up, and that's exactly what we've had happen so far. So how much higher these are going to go, I don't know, but we did make that big ABCD in the Dow Jones Industrial Average, but it's the only one of the four indices that well, no, the NASDAQ made it too at the 61% retracement, so that's the second one. So this is this big cycle day if Norm's right, and he's been right a lot more than he's been wrong. So let's just see how important that today is, the 18th. So it'll be very, very, very interesting to see how this unfolds for sure. So watch those numbers very, very closely. Let's just double check where we are here. Well, the NASDAQ's still below it, so is the Dow. Nothing much is happening. The gold is sold off about $6 from the high. We'll see if that's going to mean anything. So we'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I put the chart up of Tesla. We had someone ask a question about it. This is a perfect example of a stock that is weaker than the overall market. You notice that this stock actually topped back on September the 5th of last year. We had a nice Gartley pattern, as you can see, into January. But you'll notice that over the past several months, we've had 2 major rallies. One started for 2 weeks in February. We had another one for 2 weeks in April. These rallies were almost nearly perfect. That sets up another ABCD structure down to below $200 a share. We're trading around $287 now in Tesla, but that's what it looks like. This is a weaker than market stock. So if you want to sell something, you should sell the weakest, buy the strongest. So watch that. Another good thing to learn from this Tesla chart, and this comes from one of our friends across the pond, you'll notice that the cycles that are there, those are 31 and 17-day cycles. And what you're trying to do is to find the repetition that is there that matches up with the ratio. And you'll see several of these lining up at the same time. That's an ideal situation, because that is where time and price come together. And that was one of the main factors that W.D. Gann taught in his course back in the 1930s and 40s, that that's what that's what really happens, is you're looking for where time and price come together. That leads us also to the ABCD pattern, that the number of legs up, in other words, number of bars in an AB leg, should be equal to the number of bars in the CD leg. But that doesn't happen all the time. That only happens about 60% of the time. The other 40% of the time, that CD leg is going to be some other ratio than 1 to 1. It's going to be 1.27, 1.41, which is the reciprocal of square root of 2, which is the square root of 2. And then if we keep going, it'll go out to 1.618, and that is as far as we go. So that's it. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!